What's going on, everybody? Hopefully you're having a great start to your 2022. And in this video, we are going to be talking about my top 3 higher yielding dividend stocks for 2022. Now, I did make a video talking about my top 4 overall dividend stocks for 2022. However, those stocks were more lower yield, higher growth. The stocks we're going to be looking at today are going to be higher yield, lower growth, because I understand that everybody has different investment horizons and investment timelines, investment goals. Some people are aiming for higher yield, so that's what we're going to be talking about in this video. So before I go any further, always, if you enjoy videos like this and you enjoy dividend investing, all that good stuff, you make sure to give the video a thumbs up and you subscribe to the channel. You turn on post notifications for videos coming out Monday, Wednesdays, and Fridays. Thank you so much for clicking on this video. Now let's get into it. So what you're looking at right now is my portfolio. Over the past month, I'm up $541.62, which is a 5.54% return. You could have gone and watched my actual video where I talk about my goals for my upcoming portfolio. For the rest of the year, 2022, make 2022 your best year yet. Always grow, always expand, but not going to get into that. What we're seeing is every single stock I'm talking about in this video, I do own. Now, a quick little shout out to M1 Finance and you guys. I got 2 referral bonuses that came in today for $50 each. So I woke up this morning and I saw a $100 cash change in my account balance from 2 different referral bonuses. And I just want to give you guys a huge thank you. It means so much to me just see these referrals coming in. And it's not necessarily about the money that coming in that I like to see. It's more so about knowing that people are using my link and watching my videos and that I'm helping other people out in this world. So thank you so much. And if you want to use that link and start your M1 Finance portfolio, you can use my portfolio. It's 100% free. Use the link in the description below. And you can use that referral bonus. And by using it and depositing $100, you will get a free $50. So thank you for that. And now let's get into these high yield dividend stocks. What we're going to be seeing is first off is Vici Properties, ticker VICI. Now this is a REIT and they're up 16.73% over the past year. They have an upcoming merger where they're merging with MGM or MGP Properties, I forget the name. But what's going to happen is that all the people who own Vici or own MGP are going to be getting Vici shares, and I do own Vici. And I think right now is a relatively good time to buy this stock because of this. And I'm not saying that just because they're lower than their yearly high that they're going to reach it, but I do believe that they're at a discount. Now let's talk about their dividends and their PEs, P to FFO. They have a forward price to flow from funds from operations, 16.78, a dividend yield of 4.78, which is really, really good, and a market cap of $18.94 billion. Now we go to their dividend scorecard. They have some really good grades. They have a B plus, an A, and an A. Now, their dividend growth record is only 3 years, but that's still better than a lot of companies. They have a pay ratio of 80.25%, and they pay their dividends on a quarterly basis. If we go look on some different things, what I would like to see is this is a REIT, a real estate investment trust, and their actual earnings per share is higher than their forward dividend yield. And a lot of REITs out there that I've been seeing recently is they have lower earnings per share, but because of the debt and the different funds that they receive, they can pay out that dividend. But to see their earnings is higher is really good. Now, another thing I like about Vici is their profit margins and operating margins are very, very solid. Look at these, 68.05% profit margin and a 96.52% operating margin. Compare that to Realty Income. Now, I know they're a little bit different, as in Realty Income is kind of more renting properties, things like Walmart, different things like that. Vici is an experiential REIT. We'll talk about that in a second. We'll look at their portfolio like right after we talk about this. But they do have higher profit margins than Realty Income, which I'm not hating on Realty Income. I love the stock. I own it. I'm believing that Vici might be a better buy for the current timing. That is my personal opinion. Everything I say is not financial advice. Now let's talk about Vici. Invest in the experience. Vici is an experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality, and entertainment destinations. They have 27 leading gaming facilities, 46 million square feet that they own, over 200 restaurant bars and clubs. Now, if we go on to their kind of portfolio, they own a bunch of different gaming, casinos, bars, restaurants, and they also own some golf courses, which is pretty interesting. You can see they have different locations, and I like to see, here they have Caesar's Palace, biggest place in Vegas. They own Caesars Palace, Caesars Atlantic City, Harrods Las Vegas. Pretty big stuff if you asked me. Now, let's go ahead and talk about some more stuff like their financials. Financials, top notch, growing year over year, even through COVID, especially with them being an exponential REIT and COVID happening, and they fought through that. I really, really do like to see this. Net income increasing, very, very solid. Now let's talk about this company's cash flow. Growing year over year. The financials are top notch. Analysts are expecting great growth expectations. Look at these revenue expectations, up 45%. Estimates, earnings growing. Really like to see that. Morningstar right here is giving Vici at a 7% discount at the current moment. Really, really love to see that. Institutional activity on this stock is insane. 6.8 billion people, institutions are buying Vici stock right now, compared to only 1.98 billion selling in the past 12 months. Usually they say to follow the money, and I've been buying Vici, and it's been going down recently, you know? I'm not going to sit here and be like, oh, since September, it's just been uptrending. It's been going down, but it's starting to pick up again, and I do believe that it's going to keep continuing that momentum. Price targets, really solid. 9.6% is the minimum. 56.09% is the maximum 12-month forecast. One hold, one buy, two strong buy, giving the overall catalyst a strong buy. I really like this stock, and I believe that this REIT has a lot of upside potential. Now let's talk about stock number 2 on this list, which is Altria Group, ticker MO. They are up 15.77% over this past year, and what Altria Group is they engage in the manufacture and sale of cigarettes, and they've been expanding into smokable products, smokeless products, wine, tobacco products, different things like that. Now let's talk about this company and just how they've been performing. Over the past month alone, they're up 11.14%. They have a very, very low PE, a forward PE of 10.29. They have a dividend yield of 7.6%, which is really solid stuff. Now, they are a dividend king. Over the past year to date, they're up 15.59%, which is really, really solid stuff. They have a market cap of $87.05 billion. Now, let's go ahead and look at their dividend scorecard. Looking on Seeking Alpha's dividend scorecard, sorry, the grades are still loading. They have a dividend safety of a D+, and I would say it is because they have a high yield and a semi-higher payout ratio in the stock. Performance is not what you relatively want to see. Now, past performance does not equal historical performance, and I think that because of this, and just because of the entire market that they're in, Seeking Alpha is automatically going to give them a bad grade because they are a sin stock. They have a dividend growth grade of an A and a dividend yield of an A+. Now, they have a growth streak for 52 years, which is really solid, and they pay their dividends on a quarterly basis. Now, if we go look on some more stuff, they have pretty solid margins, profit margins of 13.16% and operating margins of 56.38%, which I really like to see. Financials, pretty solid, growing year over year, really good stuff. Net income, let's look at their net income for a second. Been a little all over the place and honestly been decreasing ever since 2018. And if I'm going to be honest, that is probably why ever since 2018, the stock price has been going downward. However, they have been able to sustain that dividend. And if you can get the dividend to overall outreach and outbeat your entire share price depreciation, and that's the way you want to invest, Altria Group is a good way to go. Now, if we look on some more stuff such as their cash flow, let's check out how their cash flow has been performing. Doing very, very flat and kind of just honestly really flat numbers, no growth, no really depreciation, but we're expecting some pretty good things from Altria Group over the next year. Earnings are supposed to grow pretty well. Sales are supposed to grow just a little bit. And the main thesis around this company's expectations for growth and revenue is inflation. And inflation is getting really high. And what they're saying is as people quit smoking or they go to other products, and as Altria is making these, substitutional products, what you're going to see is they can mark up their prices because of inflation and because, well, it's an addiction and these people need these products. And Altria Group can mark up these prices, and that's how they're going to make their money. Even with less consumers, more money being helped dealt with, sorry, I don't know why I said right there, is their main thesis. Now they are trading at a 9% discount according to Morningstar, which I really like to see. I'm not saying that just because it's at a 9% discount compared to Morningstar that it's an automatic buy, but I do think that it's a pretty solid indicator. Now we'll see that they have a wide economic moat that we really, really like to see. 3 reasons to buy this ultra high yield dividend stock. The stock trades at a forward PE ratio under 10, and this was made a few days ago, and Altria Group has honestly been on the come up ever since a few days ago. So that could be why it's at 10 right now. But if we look at some more things, just this company is doing really solid. Looking toward the future, they could be continue to offset cigarette volume declines with price hikes like I just talked about. And they have expected 5% annual earnings growth over the next 5 years. They have a payout ratio that's just below 77%, and it's been below their long-term payout ratio of 80%. So that leaves room to grow their dividend. And given their PE ratio, it's way lower than the tobacco industry average of 16.7, and they're looking very, very solid just as an investment as a whole. Now, if we go on to institutional activity, it's not been the best, 6.3 billion sold compared to 4.82 billion bought. And I would say that's mostly offset because of the annual performance. They had a green year. Usually they have a red year. We can look at the performance, but they had a red year, and maybe some people are trying to cash out and invest in other industries, other things like that. And that is their institutional activity over the past few months and past year. Now, forecast is rated as a buy, 3 hold, 0 sells, 1 buy, and 2 strong buy. Maximum forecast gives them a 22.39% upside, while minimum gives them minus 2.93% downside. I really like to see this. A lot of upside potential, in my personal opinion, on this company long term. The way that I'm playing these, though, is I have been buying in just in my pie. I've been buying more growth stocks. That's my personal investment thesis. If you want to go buy Altria Group, go do it. Invest in your portfolio however you wish. I still own Altria Group. I'm not selling anything. I'm just not adding in it. It's currently a hold in my portfolio as I'm aiming for more growth and less income at the current moment. Now let's talk about stock number 3 on this list, and the final stock, which is actually an ETF. And I'm sure you've heard of it if you're a dividend investor, is XYLD, Global X S&P 500 Covered Call ETF. This thing is an income cash cow machine. Now, over the past month, they're up 2.68%, 3.59% over the past 3 months, up 9.21% over the past year. And ever since their inception date in 2018, they are up 18.68%. You can see they had a massive dip. Now, if you could have gotten in at this COVID crash, wow, you would be sitting on a very nice dividend yield on cost. And that's how you make money. A lot of people are speculating a huge crash in the market coming soon, and that's kind of how it always is. Like ever since when the market was created, people are always like, oh, the market's going to crash, especially Robert Kiyosaki. I'm not even going to go into that. But what I'm saying is, if this fund crashes, and if the market crashes for whatever reason it might be, new COVID, different things, I am literally going to deploy a ton of as much cash as I possibly can into this fund for the yield on cost growth. And I do believe that's a big catalyst. I do believe, if I know I'm like more of a growth oriented investor, but with dividend income coming in, but this is one that I would not pass by if it crashes again like that. Now, what this fund does is they take the S&P 500 and they sell 1 month at the money call options, which just provides income so that, buying options, trading options, there's a seller for that, and whoever sells you that option gets collected income. And that's why they have such a nice dividend yield, which is, sorry, my computer's just glitched on me for a second. Their dividend yield trailing 12 months is a 9.07% rate. Look at these huge grades. These are all incredible. I really, really like to see grades like that on a dividend ETF. Now, they literally invest in the S&P 500. Their top 10 holdings include Apple, Microsoft, Amazon, Tesla, Berkshire Hathaway, Nvidia, Meta Platforms, Google. So you can see that this ETF invests in really solid companies that have a lot of upside potential. And you're kind of just betting on the S&P 500. And this is what, if I was more of a yield investor, a higher yield investor, I would focus more on investing in XYLD rather than the S&P 500 as a whole. And I think that there's a lot of upside potential for this stock, for this ETF to continue its upward momentum long term. And everybody, that is what I have for you guys in this video. So if you did enjoy it, make sure to give this video a thumbs up and you subscribe to the channel. You turn on those post notifications for videos coming out Monday, Wednesday, Friday. Thank you for making it all the way to the end of this video. Use my M1 Finance link if you'd like to. We both get a free $50. It's free money for the both of us. Thank you again, and I will see you at the next video.